If you are 65 or older and you have not touched your tax return, your Medicare premium, or your county tax office in the last year, there's a real chance you are handing back more than $9,000 that the law already says belongs to you. Quick note before we get into it. This is educational, not tax or legal advice, so always check your specific numbers with your own tax professional or your local Medicaid office because rules shift slightly by state. Here is the part that stings. None of this money is a discount. None of it is a coupon. It is money the government has already decided you do not owe, sitting behind paperwork that nobody mails to your house. You do not get a letter that says, hey, you qualify for this. You have to go find it yourself, and most people never do, because they assume if it were real, someone would have told them by now. Nobody tells you. The system is not designed to chase you down with good news. It is designed to sit quietly and let you keep paying the old way, year after year, while the rules underneath you have already changed. And two of the biggest changes on this list happened just recently, one from a law signed in the middle of 2025, and one from a Social Security law that finally took effect for millions of retirees this past year. If you have not updated your paperwork since then, you are very likely still paying money you no longer owe. Think about what that actually looks like for a real person. A 72-year-old widower living on $1,800 a month in Social Security, paying full price for Medicare, paying full property tax on a home he has owned for 30 years, and filing a tax return the same way he has for decades. He could be one phone call and one form away from thousands of extra dollars a year. And he has no idea because nothing about his mail, your doctor's office, or your tax software is going to volunteer that information to him. Where does all of this actually come from? It is not a rumor, and it is not a workaround. It comes straight from the Internal Revenue Code, from the Social Security Act, and from your own state's Medicaid rules. The IRS itself publishes the senior deduction numbers every year. The Social Security Administration runs the Extra Help program directly. Most people assume that is just the cost of having Medicare. It is not. Every state runs a Medicare Savings Program, and if your income is modest, that program pays your Part B premium for you, in full, every single month. These are not loopholes. They are written into law on purpose, for people exactly like you. The only trick is that almost none of them are automatic. Let's start with the one that quietly costs seniors more than any other single bill on this list, because it comes out of your Social Security check before you ever see it. In 2026, the standard Medicare Part B premium is $202.90 a month. That is over $2,400 a year, deducted automatically, whether you use a single doctor's visit or not. Most people assume that is just the cost of having Medicare. It is not. Every state runs a Medicare Savings Program, and if your income is modest, that program pays your Part B premium for you in full every single month. There are 3 tiers. The most generous is called QMB, and in most states it covers a single person with income up to around $1,350 a month, or about $1,824 for a couple. QMB does not just erase the premium, it wipes out your deductibles and your copays too. And by law, providers are not even allowed to bill you for the difference. If your income is a little higher, up to around $1,616 a month for one person. There's a second tier called SLMB, which still erases that $200 monthly premium completely, even though it does not touch your other costs. And if you are just above that, there is a third tier that goes even higher. Here is what most retirees do wrong. They see the income numbers, assume they are too high to qualify, and never apply. But these limits are usually higher than people expect, and a $20 disregard is applied automatically before your income is even calculated. The only way to know for sure is to call your state Medicaid office and ask directly. Picture a single retiree bringing in $1,400 a month from Social Security and a small pension. On paper, that might sound like too much to qualify for help. In reality, once the standard disregard is applied, that person can land right inside the SLMB range, which means over $2,400 a year back in their pocket for doing nothing more than filling out one form. And once you are approved for any of these 3 tiers, something else happens automatically, which brings us to the next one. The moment you are enrolled in a Medicare Savings Program, you are also automatically enrolled in a separate benefit called Extra Help, which the Social Security Administration itself values at around $5,700 a year for the average beneficiary. This is the piece almost nobody talks about, because it happens quietly in the background. Extra Help caps what you pay for every prescription covered under your Medicare drug plan. In 2026, no more than $5.10 for a generic, and $12.65 for a brand name drug, no matter how many prescriptions you are taking. For someone managing blood pressure medication, a statin, and a couple of other prescriptions every month, that is the difference between filling every bottle and quietly splitting pills in half to stretch a supply. Here's where it gets important. You do not have to qualify for a Medicare Savings Program to get Extra Help. You can apply for it directly and separately through the Social Security Administration, even if your income puts you outside the Medicare Savings Program range. Most people never apply for either one, because they assume anything with the word Medicaid attached to it is only for people with almost no income at all. That assumption alone is probably the single most expensive mistake on this entire list. Someone taking 4 or 5 maintenance medications a month for blood pressure, cholesterol, and a couple of other conditions can easily be looking at a few $100s a month in prescription costs without extra help. With it, that same person is capped at a few dollars per prescription, full stop, for the entire year. Multiply that difference by 12 months and you can see exactly where that $5,700 figure comes from. Now let's talk about the bill that is usually the biggest one you pay all year if you own your home: property tax. Most people stop here and think there is nothing they can do about it. Don't. Nearly every state gives homeowners 65 and older a way to freeze or shrink that bill, and the savings compound every single year you stay in the home. Some states call it a senior freeze. The taxable value of your home locks in place the day you qualify. So even as your neighbor's bills climb with rising home values, yours does not move again for as long as you live there. Other states knock a fixed dollar amount off the taxable value before the tax rate is even applied, which functions like a permanent discount on the bill. In Texas, for example, the school tax portion of your property tax can be frozen at 65 with no income test required at all. Your age alone qualifies you. In many states, the yearly savings run well into the hundreds or even over $1,000. And over a decade or two in the same home, that adds up to tens of thousands of dollars you would otherwise have paid. Here's the catch, and it is the one that costs people the most. This is almost never automatic. You typically have to file an application, often in the same year you turn the qualifying age. And if you let that window pass, most counties will not go back and refund it. Your county assessor is not going to volunteer this information because every dollar they exempt is a dollar of revenue they lose. One phone call this week to your county assessor's office, asking specifically what senior exemption or freeze applies to homeowners your age, can lock in savings for the rest of the time you live there. And it is not just Texas. Homeowners in states like Florida, South Carolina, and New York have similar age-based exemptions or circuit breaker credits that reduce the taxable value of a primary residence once you cross the qualifying age, though the exact age, income limit, and dollar amount differ by county. Which is exactly why the phone call matters more than guessing based on what you heard from a neighbor in a different state. Here's the part they never tell you about your federal income tax. There is a widespread belief that everyone owes something every April, no matter their situation. For a large number of retirees living on Social Security plus a modest amount of other income, the correct amount owed is legitimately zero. Start with the basics. The standard deduction is already higher the year you turn 65. An additional $2,000 for a single filer, or $1,600 per qualifying spouse for a married couple in 2025. Then stack on top of that a brand new provision. Starting with the 2025 tax year under the law commonly called the One Big Beautiful Bill Act, there is a new senior bonus deduction worth up to $6,000 for a single filer, or up to $12,000 for a married couple where both spouses are 65 or older. This is available whether you itemize or take the standard deduction, and you do not need to do anything special to qualify beyond your age and a valid Social Security number. There is an income limit. The deduction begins phasing out above $75,000 of modified adjusted gross income for a single filer, or $150,000 for a married couple filing jointly, and disappears completely above $175,000 for singles or $250,000 for couples. For a typical retiree well under those limits, stacking the regular standard deduction, the existing senior addition, and this new $6,000 bonus can bring taxable income down to essentially nothing. And here is the urgency most people miss. As the law is written right now, this $6,000 bonus only exists for tax years 2025 through 2028, unless Congress votes to extend it. This is not a someday benefit. It is a claim it while it lasts benefit. And if whoever prepares your return is not explicitly applying both the age 65 standard deduction addition and the new bonus deduction, you are very likely overpaying a tax you do not actually owe. Now here's a change that is more recent, and it specifically affects a group of retirees who spent years hearing no from Social Security. If you worked a job that did not pay into Social Security, many teachers, firefighters, police officers, and other public employees, along with a job that did, you may have spent years having your Social Security benefit reduced or even eliminated entirely because of two old provisions called the Windfall Elimination Provision and the Government Pension Offset. In January 2025, the Social Security Fairness Act repealed both of those provisions completely, and the Social Security Administration has been issuing retroactive payments and increased monthly benefits to more than 2 million people affected by this change. Most people stop here and think this only applies to somebody else's situation. But if you or your spouse ever worked in public service and were told your Social Security benefit would be reduced because of a pension, this repeal may apply directly to you. And if you have not contacted Social Security to confirm your benefit was recalculated, you could still be owed a lump sum, on top of a permanently higher monthly check going forward. Picture a retired teacher who spent 30 years in a public school pension system and only worked a handful of years in Social Security-covered jobs on the side. Under the old rules, her Social Security spousal or survivor benefit could have been reduced by hundreds of dollars a month, sometimes down to nothing at all. Under the repeal, that reduction is gone, and the Social Security Administration has been processing both the ongoing higher payment and a retroactive lump sum, covering the months the offset should never have applied. If that sounds like your situation or your spouse's, call Social Security directly and ask them to confirm your benefit has already been recalculated under the Social Security Fairness Act. The last one is smaller than the others individually, but it is a bill you pay every single month for the rest of your life, and most people have simply never questioned it. It is your phone and internet service. There is a federal program called Lifeline that provides a monthly discount on phone or internet service for people with a modest income, or for anyone already enrolled in a program like Medicaid or Extra Help. It will not erase the bill entirely, but it takes a set amount off every month on a service you were going to pay for regardless. On a fixed income, a discount that repeats every month for years is real money you are otherwise leaving on the table for no reason at all. Step back for a second and notice what every single one of these has in common. Not one of them switches on by itself. The senior bonus deduction only works if whoever prepares your taxes actually applies it. The senior bonus deduction only works if whoever prepares your taxes actually applies it. The Social Security Fairness Act repayment only reaches you if Social Security has your correct information on file. None of these are hidden on purpose in some sinister way. They are simply written with just enough paperwork attached that most people give up partway through or never start at all. So here's the one thing to actually do with everything you just heard. Pick the single item on this list that applies most directly to your life and act on just that one this week. If Medicare is coming out of your check every month, call 1-800-MEDICARE or your state Medicaid office and ask specifically about the Medicare Savings Program, because that is the door that also opens extra help behind it. If you own your home, call your county assessor's office and ask what senior property tax exemption or freeze you qualify for. If you file a tax return, ask your preparer directly whether the age 65 standard deduction and the new senior bonus deduction were both applied to your return. You do not need to chase every item on this list in one afternoon. You only need to open one door, because the money behind it has already been yours the whole time. The law is just waiting for you to come pick it up. If this saved you even one of these, there is a good chance it will save someone you know too. A parent, a neighbor, someone who has been quietly paying full price for years because nobody ever told them the rules had already changed in their favor. Send it to them today. And if you want more of these breakdowns as new rules and numbers come out each year, subscribe, because the next one might be worth even more than this one.